I'm driving back from the car dealership, which that'll be a whole other episode tomorrow. And I see McDonald's, and I'm like, yeah, knowing me, it's probably the good fry season. That's a whole other topic, but McDonald's has different fry seasons. Maybe I'll grab a fry and a Coke or something, but the line's not too bad. Which, for a long time, the line has been around the McDonald's building, to the point where you don't want to go. I started driving by the McDonald's and I see there's nobody in line. So I pull right up, place my order, and there's only one car and they're leaving. And this is 1 p.m. on a weekday. And I'm like, yeah, this is strange. And I've been noticing this lately in the morning and afternoon where there's no line at McDonald's. And there's, for the last 2-3 years, there's always a line at McDonald's. 1 p.m. on a Tuesday, one car. I don't know I know what's going on. Gas prices is probably the issue. But now I'm starting to think I'm driving home, 2 cars in line at Starbucks. That's at 120. You couldn't get anywhere near this Starbucks in the last 5 years at 1 p.m. in the afternoon. It's not even an option. Line wraps around all the way out to the street. I've been seeing more and more of this. I stopped going to Starbucks for a while because it was so busy. I don't have 35 minutes to wait in line. I've drank more Starbucks in the last couple weeks than I have in a long time because I can actually get in line. So now I have to ask the question, if there's only one car in line at McDonald's at 1 p.m. and Starbucks ain't busy, at what point do we start to see that showing up in the earnings report? And are we going to watch the fast food stocks just crash? Like, I'm looking at McDonald's here, and I'm not giving financial advice in any way. That's not what I do. But, we saw that lull where, all stocks were kind of taking a little bit of a beating earlier in the year here. And it's climbing back up. But I'm like, man, you just saw the supply chain issues hit Ford, where I think their quarter was down 17% and month over month down 23%. Because I'm having, I had a truck on order, if you follow my channel, for 8 months now, and it looks like I'm probably never going to get it. If they can't build the stuff, they can't sell it. So now you're seeing this delay. We knew all last summer of these supply chain issues, semiconductor issues, but it's just now really starting to show up on the balance sheets. We're witnessing a slowdown in fast food sales. To be honest, I'm invested in restaurants, and we saw a dip as soon as the war started. Gas prices have been going up for the last year, but slow and steady. Once the war started and we started seeing like $4.55 gas around here, at the restaurants, we know, the ticket price went down, and then, just overall customer volume. If you think about it, when gas prices double, you ain't got that money for the $5 latte in the morning. You don't have money for the McDonald's. You don't have money to eat out. Now you're going back to the store. But now you go back to the store and you realize how much groceries are. Oh, man. So now I'm looking at stock plays. It's like I'm sitting here watching this McDonald's rise. It's like, man, do I go short this thing? Is it that bad? And here's what I typically do. Most of the time when I eat my lunch, I eat in my car when I'm eating out, which is every day. Like today, I just drove and ate my fry and drank my Coke. Not too ashamed to say it. I like McDonald's fries. If you don't, that's good for you. But a lot of times I'll go to Chipotle Grill, in a strip mall, get my food. I'll listen to a podcast or something. But I'll actually watch all the stores in the strip mall. And I'll try to count how many people come in and out, what type of people go in and out. And I'm trying to gauge how much a store is doing per hour in revenue. You figure out average ticket price, how many customers. This kind of helps me decide the kind of businesses I want to get involved in, what's trending, what's not, what's interesting. Sometimes you sit at a place and it's like, man, 3 customers. How do you stay in business? And then you're sitting in front of some vitamin shop and you see 25 people going in and out in 45 minutes. Like, this is bonkers. Maybe I'll just go sit in a McDonald's parking lot, kill a fry, listen to a podcast, and just, on my phone, I'll just take some numbers down and to see how many people come and go through the drive-through. Or I mean, they don't really eat inside anymore since COVID started. Try to figure out if this is a pattern or a blip, spring break maybe. But this was going on before spring break. Uh, I don't know, man. I'm looking at this and I'm wondering. You're seeing Ford take the hit. Is 3 months from now, whatever the quarter pops up, are you going to start seeing all the fast food companies get obliterated because people were spending $400 a month on gas and now they're spending $800 a month on gas, and you got to save $400 somewhere, and they're probably not going to go to McDonald's and Starbucks and Jersey Mike's and all these places that you see packed at lunchtime. Then it makes you wonder, what about other places, the Chili's or J. Alexander's and all these sushi joints that popped up? How does it affect them? They're not all publicly traded, so there might not be opportunity there. Is there an arbitrage opportunity here to catch a pullback or a dip because gas prices has put a hurt on these stocks? And it's one of those things, like, do you short it now? You catch it on a dip, and then it looks like gas prices are trending the right way. They're going down, assuming nothing crazy happens over in Ukraine. Do you try to catch the dip now and then turn back around and go long if you feel like the gas prices are going to stabilize and go down, people get back to business? So is there an opportunity there? I don't know. It sounds like more work than I'm willing to put into this at this point, but if I see a trend where I keep driving by fast food places, Starbucks, McDonald's, and the drive-thrus aren't busy like they used to be, I'm going to have to step back and say, okay, either they're getting it all delivered on Grubhub, or there's definitely a slowdown in fast food. Any kind of QSR, fast casual, I got to go take a look at that. I can also look at, the receipts from my own investments in restaurants and say, okay, it's there's been a 10, 15, 20% pullback monthly on sales. Use all the information and maybe I'll go, okay, this is going to hurt earnings. These stocks are going to drop. And then try to make a prediction. Do they keep going down or are they going to bounce back? And it's one of those things where maybe you make 10, 12% on the way down and you can make like 15, 18% on the way up. And hell, that's a pretty nice little swing there if you can catch it in 6 months. I think we have a lot of economic issues. Rates are going up. It's going to put pressures on all these people that got credit card debt. And then this thing is going to go up another 2.5, points. Those credit card rates are going to go up. Your monthly payments are going to go up. Housing market's going to slow down. If you want to buy a new car, cars are expensive and rates are going up. Inflation, gas prices, man, we got so many headwinds and so much turmoil. So I'm kind of looking at, like, if there is short opportunities in the next 6 to 12 months, who's going to take the biggest hit and why? You figure that out. Maybe you try to catch it both ways, right? It's hard to make money when it's going sideways. It's got to go up. It's got to go down. It's got to do something. There's nothing worse than the stock market that just goes straight across. Kind of like what's it? When they monitor your heart and it's blipping, it's going up and down, and when it flatlines, you're dead. Like, you just can't make no damn money when it flatlines like that. So we shall see. Pay attention. You eat out. See how many people are in a restaurant. Look at how many people are in line, what time of day. If you don't eat out, just drive around. Going to work, coming home. Look at the drive-through windows and see who's packed, who's not packed. If it's 5:30 to 6:30 and there's no one in the drive-through window consistently, we got a pattern here. So we'll see what happens. There always is a lag. We see things in real time and they hurt us 3, 6, 9, 12 months from now. They say that about the inversion, right? The great predictor of recessions. But once you see the inversion, it's usually like 1 to 2 years after that is when the recession hits. We heard about all the supply chain issues with Ford. Yeah, manufacturing in general, with semiconductors, all through 2021. We're really starting to see it hit the earnings reports now. We know the drive-through windows are slow now. Is it 3 or 6 months before it really shows up? We'll see. Something to keep an eye on. Anyways, I literally just went to McDonald's And it's just like, I gotta do an episode. I don't think I've ever been through a McDonald's window or at lunchtime on a weekday, and I just pulled right up and pulled right out. It's unheard of around here. Maybe not where you're at, where I'm at. That's just unheard of. We eat out all the time. So, anyways, that's all I got for this one. If you saw or have seen something that has caught your eye, sales are down, things are slow, your favorite joint's just not busy, drop a comment below. I'd be curious to hear what you have to say. Until then, I'll catch you on the next one.